You say, I try hard. You study charts, you watch videos, you read books, you wake up early, you stay up late, and yet trading success still feels just out of reach. That confusion is one of the most painful experiences a trader can face. Because in most areas of life, trying harder produces better results. Work harder in school, you get better grades. Work harder at the gym, you get stronger. Work harder at your job, you get promoted. So naturally, you bring that same belief into trading. And the market does something shocking. It ignores your effort. The market does not reward hard work. It does not care how much you want to win. It does not respond to discipline the way other professions do. This is where most traders break, not because they lack intelligence, but because they are applying the wrong mental model. Trading success is elusive not because you're lazy, but because trying hard is often the very thing blocking consistency. Effort feels noble. It feels responsible. It feels like the one thing you can always rely on. If something isn't working, you push harder, you focus more, you demand more from yourself. In almost every area of life, this mindset is rewarded. The world teaches you that effort equals progress, that intensity equals improvement, that if you just apply enough force, results must follow. Trading is the one environment where this belief quietly turns against you. When you try hard in trading, you don't just bring focus to the screen, you bring expectation. You bring urgency. You bring a hidden demand that the market should respond to your preparation. And the moment effort turns into expectation, pressure is born. Pressure is not loud at first. It doesn't announce itself. It shows up subtly in the way your body tightens when price approaches your entry. It appears in the way your eyes lock onto every tick after you enter a trade. It reveals itself when a small pullback feels threatening or when you start mentally calculating profits before the trade has even had time to unfold. Pressure changes perception. Under pressure, the market stops being a neutral flow of information and starts feeling like a test. Every candle becomes a judgment. Every fluctuation feels like feedback about your intelligence, your discipline, your worth as a trader. At that point, you are no longer observing the market, you are reacting to it. Objectivity requires distance. Pressure eliminates distance. When you are trying hard, you are emotionally close to the outcome. Too close. You need this trade to work because it represents your effort, your study time, your sacrifices, your belief that you're doing everything right. The trade is no longer just a trade, it becomes a verdict. This is where clarity begins to collapse. You start seeing patterns that aren't there because you want confirmation. You ignore information that contradicts your bias because accepting it would mean admitting uncertainty. Stops feel negotiable. Targets feel flexible. Rules feel optional. Not because you lack discipline, but because pressure is quietly rewriting your priorities in real time. Pressure narrows perception. Instead of seeing the full range of possibilities, you see only what supports your emotional need in that moment. If you're afraid, you see danger everywhere. If you're hopeful, you see opportunity where none exists. The market hasn't changed, your internal state has. Trying hard amplifies this distortion. The more effort you invest, the more you feel entitled to a positive outcome. And entitlement is lethal in trading. The market does not know how much work you've done. It does not care how prepared you feel. It does not adjust probabilities to reward sincerity. Yet emotionally, you behave as if it should. That mismatch between expectation and reality creates internal conflict. And conflict consumes mental energy. Instead of calmly executing your plan, your mind is busy negotiating, justifying, defending, and second-guessing. You are no longer present, you are managing stress. Objectivity cannot coexist with stress. A calm mind observes. A pressured mind reacts. Think about the moments when you've made your worst trading decisions. They rarely came from boredom or detachment. They came when you were trying to fix something, recover a loss, prove something, make back time, validate your skills. Those moments were fueled by effort-driven urgency. The irony is brutal. The harder you try to control the outcome, the less control you actually have over your behavior. True objectivity comes from acceptance. Acceptance that any trade can fail. Acceptance that uncertainty is permanent. Acceptance that your job is not to win, but to execute flawlessly within risk. Effort resists acceptance. Effort says, I must make this work. Acceptance says, I will execute regardless of outcome. When you stop trying to force results, pressure dissolves. And when pressure dissolves, your mind regains its natural ability to see clearly. You notice information without judgment. You follow rules without emotional debate. You exit trades without hesitation or regret. This state feels almost passive to traders who are addicted to effort. It can feel irresponsible, even lazy. But it is the most disciplined state a trader can achieve. Because discipline is not tension. Discipline is alignment. Alignment between what you believe about the market and how you behave inside it. If you believe outcomes are uncertain, but you trade as if effort should guarantee success, pressure is inevitable. If you truly accept uncertainty, there is nothing to push against. No need to force. No reason to tense. Objectivity emerges naturally when there is nothing to defend. This is why the most consistent traders often appear calm, even bored. They are not emotionally invested in proving anything. They are not trying to make the market cooperate. They are simply executing an edge over time, knowing that individual outcomes are irrelevant. They are not trying hard in the way most struggling traders are. They are not intense. They are not urgent. They are not emotionally loud. They are clear. And clarity is fragile. It cannot survive under pressure. If you want to trade objectively, you must let go of the belief that effort produces safety. Effort in trading does not reduce uncertainty, it magnifies your awareness of it. And if that awareness is not paired with acceptance, fear steps in to fill the gap. Stop asking yourself to care more. Start asking yourself to need less. The moment you stop trying to make the market reward you, you give your mind permission to observe without distortion. And when observation replaces expectation, objectivity returns. That is where consistency begins. Every trader says they understand that the market is uncertain. They say it out loud. They nod when they hear it. They repeat it like a mantra. And yet, when real money is on the line, their behavior tells a very different story. They are still trying to control the outcome. They want to know if this trade will work. They want confirmation before entering. They want reassurance after entering. They want certainty disguised as analysis. This is not a lack of intelligence. It is a deeply human response to uncertainty. The mind is wired to seek control, to eliminate risk, to predict what happens next. In most professions, this instinct is rewarded. In trading, it quietly sabotages everything. The market does not offer guarantees. It never has and it never will. Each moment in the market is unique, even if it looks identical to something that happened before. Price has no memory. It does not know your setup. It does not respect your analysis. It simply moves based on forces that are beyond your ability to predict with certainty. And yet, most traders approach each trade as if certainty is possible. They analyze until they feel confident. They wait for alignment across multiple indicators. They hesitate because they want to be sure. What they are really doing is trying to remove uncertainty before acting. But the moment you require certainty to enter a trade, you are already in conflict with the nature of the market. That conflict creates hesitation. Hesitation creates missed opportunities. Missed opportunities create frustration. And frustration leads you right back into emotional decision-making. Trying to control outcomes is exhausting. You watch every tick because you believe your attention can somehow influence the result. You move stops because you believe you can avoid pain if you just intervene at the right moment. You take profits early because you're afraid the market might take them back. Every one of these behaviors comes from the same illusion that you can manage uncertainty through effort. But uncertainty cannot be managed. It can only be accepted. Probabilities operate on a completely different mental framework. When you think in probabilities, you stop asking whether this trade will win or lose. You already know the answer. It could do either. What matters is not the outcome of this trade, but how this trade fits into a series of trades executed with consistency. Most traders never truly internalize this. They understand it intellectually, but emotionally they are still attached to each result. Each trade feels like a referendum on their competence. A win confirms they are doing something right. A loss feels like evidence that something is wrong. That emotional attachment is the root of inconsistency. When you are focused on outcomes, every loss feels personal. And when a loss feels personal, the mind instinctively tries to avoid it in the future. That's when you start skipping trades, tightening stops, overanalyzing entries, or changing systems too quickly. You are no longer following probabilities, you are reacting to pain. The irony is that probabilities only work if you allow them to play out over time. You cannot experience the benefit of probabilistic thinking if you intervene emotionally after every trade. You cannot collect the edge if you sabotage the process the moment discomfort appears. The edge exists only across a large sample size, not in any single outcome. Trying to control outcomes collapses that sample size. You jump from strategy to strategy because you want something that feels more certain. You tweak rules because you believe perfection is possible. You believe that if you just find the right combination of indicators, losses will disappear. But losses are not a problem to be solved. They are a cost of doing business. The moment you truly accept that losses are inevitable, your relationship with the market changes. You stop resisting them. You stop fearing them. You stop trying to outsmart them, and in that acceptance, clarity emerges. Probabilistic traders do not need the market to behave a certain way. They do not need validation from a single trade. They do not need to be right. They only need to execute their edge consistently. This is why they can place a trade and walk away. Not because they don't care, but because they care about the process more than the outcome. Outcome-focused traders live in the future. They are always projecting what might happen next. Probabilistic traders live in the present. They are focused on what needs to be done now. Control is an illusion that keeps you mentally busy but strategically stuck. The more you try to control outcomes, the more emotional energy you burn. The more emotional energy you burn, the less disciplined you become. Discipline does not come from willpower. It comes from alignment with reality. Reality says that no setup guarantees success. Reality says that randomness is unavoidable. Reality says that consistency is born from execution, not prediction. When your beliefs align with these truths, behavior becomes effortless. You no longer hesitate at entry because you are not trying to avoid uncertainty. You no longer panic during drawdowns because you understand variance. You no longer feel the urge to interfere with trades because you trust the math of your edge. This trust is not blind faith. It is earned through experience and acceptance. It comes from seeing that trying to control outcomes only creates more pain, while surrendering to probabilities creates stability. Surrender does not mean passivity. It means releasing the need to force. You still plan. You still define risk. You still follow rules. But you do so without emotional attachment to how any single trade unfolds. Most traders never make this shift. They remain trapped in outcome-based thinking, constantly chasing certainty in an environment that cannot provide it. They blame their strategy, their timing, their psychology, without realizing that the real issue is their relationship with uncertainty. The market does not require you to predict it. It requires you to participate in it correctly. When you stop asking, "Will this trade work?" and start asking, "Did I execute my edge properly?" you move from emotional trading to professional trading. That shift is subtle, but it changes everything. The market will always be uncertain. That is not the obstacle. The obstacle is your need to control what cannot be controlled. Let go of that need, and probabilities can finally do their job. Needing the market to reward you is one of the most invisible traps in trading, and also one of the most destructive. It doesn't feel wrong. It feels reasonable. You've studied, practiced, sacrificed time and energy, and now you want something back. You want results. You want proof that you're on the right path. You want confirmation that all of this effort means something. That need quietly changes everything. The moment you need the market to reward you, trading stops being an exercise in execution and becomes an emotional transaction. Each trade is no longer just a setup with defined risk and potential. It becomes a request for money, a request for validation, a request for relief. And the market does not respond to requests. The market only moves. When you need a trade to work, you are no longer neutral. You are invested in a specific outcome. And once you are invested, your perception begins to bend. You start seeing what you want to see and ignoring what you don't. You interpret information instead of observing it. You hold losers longer because you need them to turn around. You take profits early because you're afraid the market might take back what it gave. Needing creates attachment. Attachment creates fear. Fear of loss is not about money. It is about deprivation. It is about the market not giving you what you believe you deserve. And when fear enters, discipline quietly exits. Not because you are weak, but because fear always feels more urgent than rules. Most traders don't realize how deeply this need is embedded in their behavior. They tell themselves they're trading to follow a system, but emotionally they are trading to fix something. A losing streak, a bad month, a sense of doubt, a fear of falling behind. The market becomes the solution to an internal problem. That's when trading turns toxic. When you need the market, you give it power over your emotional state. A winning trade makes you feel capable and calm. A losing trade makes you feel frustrated and uncertain. Your confidence rises and falls with your equity curve. You are no longer in control of yourself. You are reacting to price. This is not sustainable. Consistency requires emotional independence. It requires that your sense of stability does not come from the outcome of your last trade. As long as you are emotionally dependent on the market, you will keep sabotaging your own execution. The market is not a parent. It is not a judge. It is not a partner. It does not owe you anything. The sooner this is fully accepted, not intellectually, but emotionally, the sooner your behavior begins to change. Professional traders do not trade to feel better. They trade to execute an edge. That distinction is everything. When you stop needing the market to reward you, something strange happens. The urgency disappears. The pressure dissolves. You stop forcing trades. You stop chasing moves. You stop trying to make something happen. You wait. You observe. You act only when your conditions are met. This feels uncomfortable at first because most traders are addicted to stimulation. They equate activity with progress. Doing nothing feels like falling behind. But patience is not passivity, it is discipline without emotional noise. Needing the market makes you impatient because you are always trying to extract something from it. Freedom comes when you realize that your job is not to extract but to participate correctly. Participation means you show up with a plan. You define risk in advance. You accept the possibility of loss before entering. You execute without hesitation. You walk away without emotional residue. None of this is possible if you are seeking a reward. Reward seeking creates bargaining behavior. You bargain with stops. You bargain with targets. You bargain with rules. You tell yourself stories to justify staying in bad trades or exiting good ones too early. These stories feel logical in the moment because they are fueled by need. Need distorts logic. When you no longer need the outcome, your mind clears. You can exit a losing trade without anger. You can miss a move without regret. You can take a series of losses without questioning your self-worth. Losses stop being insults and start being data. This is the point where trading stops being emotionally exhausting. Most traders believe that confidence comes from winning. In reality, confidence comes from knowing you can execute your plan regardless of outcome. That confidence cannot be shaken by a losing trade because it was never built on winning in the first place. When you stop needing the market, you stop fighting it. You stop trying to predict it. You stop taking its movements personally. Price becomes information again, not commentary on your ability. This is the mindset that allows you to think in series instead of singular events. One trade does not matter. One day does not matter. 1 week does not matter. What matters is alignment over time. The market will sometimes reward you and sometimes punish you, but neither is personal. When you stop craving the reward, you also stop fearing the punishment. Emotional neutrality emerges not because you suppress feelings, but because there is nothing at stake psychologically. This is the paradox of trading success. The less you need to win, the more capable you become of executing in a way that allows winning to happen. Needing is a form of resistance. It is resistance to uncertainty, resistance to randomness, resistance to loss. And resistance always creates friction. That friction shows up as hesitation, impulsivity, overtrading, and regret. Letting go of need is not resignation. It is alignment with reality. Reality says you do not control outcomes. Reality says losses are inevitable. Reality says consistency is probabilistic. When your beliefs align with these truths, the market loses its emotional leverage over you. You no longer look to it for reassurance. You no longer expect it to compensate you for effort. You simply do your job. And that is when success quietly becomes possible. Not because you demanded it, not because you chased it, but because you stopped needing it. Trading success is not found in effort, control, or need. It emerges when you accept uncertainty, release emotional attachment to outcomes, and commit fully to disciplined execution. The market does not reward desire or hard work, it responds only to consistency over time. When you stop trying to force results and stop needing validation from price, clarity returns. In that clarity, fear loses its grip, discipline becomes natural, and probabilities are allowed to work. Success arrives not through intensity, but through alignment with how the market truly operates.